know you know what to do. Kick it with me and go without them blicks on me. And if I do,
So brand new week 11. It's currently the 18th of March, Tuesday. Second daily candle of the week opened, happened to print new all-time highs at 3,017.5 or 0.6, that's it. One trade took so far, and we did take some buys off the 2084 bounce, the 2980s like AOY that was developing as we go into this new week. Became stronger and stronger as the weekly candle developed. We did not break it, and eventually we took off into new all-time highs again after a minor accumulation on the intraday. We took these buys after London Open. Price obviously bounced from the lows, and then by the time we got London Open, we were around 2990s, which was around the previous breaker structure. We rejected, pulled back to the key level to again solidify the seller exhaustion as we did not break the lows and create a double bottom formation for us, perfectly around the key level, perfectly around the AOY. And obviously we had that shift in structure earlier, which confirmed that we were more bullish than bearish, as we weren't breaking any lows at all. And we took the bounce with the London Open volume, the bounce of the 2884s, and caught 75 pips as we broke these highs again. Price went on to 3,000 and printed new highs above there afterwards. And then this is when we took off into the new daily candle and printed new highs. And that's price action right now. 30.28 buys on gold post London close. This was basically just a lower time frame trade using pretty much lower time frame slash a bit of intraday structure. But I noticed that we had basically broken out into new highs, 10 a.m. Eastern. Then we started to reject, pull back to retest the previous highs. It started to show exhaustion. We did make some new lows after 10 a.m. Eastern, but after that, we did not break below those lows. And as you can see, we started to form a minor support level. And we got the double bottom, as you can see on the 1 minute. First one, the second one. This all happened to align with the London close. And then we started shifting back bullish, breaking the highs and breaking the previously bearish structure that we had here. Above the key level as well, just happened to be around the key level and obviously around this kind of AOY slash maybe like intraday AOY, you could say. But it's definitely a minor AOY because it has literally just been created earlier in the day. We got those 75 pips, price pushed almost 90 pips from the key level after London close and is still pushing as we speak, going into the new daily candle. We're at very high prices right now, and realistically on the intraday, based on intraday ideas, this just doesn't make sense because price is just too high. We need to start seeing corrections, and then we came back for a second bounce, which technically prints an intraday double bottom. That minor zone that we were talking about prior in the last daily candle has just been solidified more with the retest. And there we have it again, the second buy bounce of 30.28, taking it back to 35.53 and 0 for the week now. We're back. As expected, we had no rate change, so dovish to neutral stance realistically, pricing in future rate cuts for the end of the year, but currently just holding that 4.5% interest rate for the Fed. Now, we had a huge bullish reaction on gold. That actually was a setup so perfectly after London close, but because of the interest rates and prior experience that I've had with other interest rates, I didn't take this trade. Obviously, it ended up working out monumentally and we ran into new all-time highs again. I took the conscious decision to not take it purely because of it being interest rates, and I wanted to wait for the interest rate decision to happen and then potentially look for some entries to capitalize on into the new daily candle. But unfortunately, by then, by the new daily candle, price had already been into new all-time highs and there was no longer an entry for me to take. And I pretty much knew that. Realistically, I would have just entered the trade. If there was no rate decision and it was London close, a normal day, and I saw this setup, I would have just executed. No problem at all. London Open buys 30.46s. It was a lower probability trade, technically, because we didn't get all the confirmations. Now, as we go on into London Open, I am looking to take buys on the 30.46 bounce. Price leading into London Open was actually printing new lows. It printed new lows below here, slightly rejected pullback, and then continued to print new lows below here. So technically, around 3:20 a.m. Eastern, we were still printing new lows since we did pull back above the key level. Now, this is where I made the mistake and I got in, seeing the break and retest intraday AOY demand zone, seeing that it was pretty solid and it had been retested multiple times now and held. So that was a confirmation for me. Obviously, the double bottom on the lower time frames forming exactly around London Open, which was perfect timing. We just didn't get that breaker structure back bullish after we printed new lows on the lower time frames, and obviously after that we just continued printing new lows. After that session was chalked and we took that L, we actually dig deeper into the 30.28s. This was actually a much stronger demand zone here where price rejected. As you can see, price on the intraday level has retested this many times. We did not break that low again, and after that we would just maintain a bullish structure. Broke these highs here, which was our first shift into new lower time frame highs, pulled back below, maintained these lows here, forming like a minor support level above the previous low that was made. So as long as this was maintained, there was a good chance that we're going to maintain these lows as well. And then after 10 a.m. Eastern, prices obviously continue to maintain these lows and even printed new lows that continue to maintain, and eventually price just created the double bottom again on the lower time frames and continue back above the key level, which was just perfect. Post 10 a.m. Eastern, 30.34 buys. After that pullback and that little minor sell-off we had in the London session, it just set up for better prices for this trade, and it was a much better trade to take. We took this week quite a lot of trades this week. Not gonna lie, I kind of embraced taking a little bit more trades than I would usually take because there was so many opportunities. After a pretty heavy correction on the intraday, I'm not gonna lie, back into the 3000s. So yeah, we caught the 30.04 buys on gold all the way to the 3013s post 10 a.m. Eastern. And this is what I was waiting for. Double bottom, shift, and we got literally tagged right into the intraday key level. I haven't even moved this key zone in literally days. I drew that like at the start of this week. Last week we went 5-1 with 6 trades overall. But it was a very profitable week and it was a very active week with lots of setups. So recap week 11, we're staying on top of shit, man. Let's go. Let's end off March very well.